I've made it pretty clear what my views on the markets are right now, and in short, it isn't good at all. Things have changed. The monetary environment is poor, inflation is sky high, and while it's technically possible that it has reached its peak, frankly, I think actually believing that is just a little bit too optimistic for the world that we really live in. Now, as I say this today, no one is really shocked to hear that, but 3 months ago or 6 months ago, actually they were, and the vast majority of people out there were adamant that I was wrong and that we were on the verge of the greatest bull run in history. What I do think is interesting though, is that despite the fact that I've been right about what I've predicted, I was right about the Communist Party of China continuing their crackdowns, I was right about inflation staying far higher than the pundits and the governments told you it would, and I was right about the markets peaking in December, back when I sold out of American stocks. And yet I still get people appealing to authority, and claiming simply that they'd rather listen to someone with a little bit more experience. So fine, I thought, I'll show you what Steve Weiss has to say, an incredibly accomplished investor who runs a fund with hundreds of millions of dollars at his disposal.
Really trying to help people understand like where we are and where we might go from here, and if there are any signs that you see that we could stage a turnaround, right? Yesterday, some said that's capitulation. That's what we were looking for. You had more than 90% down volume, a sign that people were looking for. Sentiment is as negative as sentiment could be. Cooperman today talking about selling, pops in the market, selling strength. He said price action's bad. How do you see it?
Yeah, I don't see a turnaround. I think we're overdue for a short-term rally, but I'm not going to participate in it. If there are any bell that rang as Powell's comments were that bell, it said, okay, trade it and trade it very short term, as I noted on Wednesday. It lasts for a few hours, as I thought it would, but then it's back to more of the same. Look, the facts are, while sentiment has turned decidedly bearish, it's newly bearish, and it's still couched in saying, well, look, if you take this kind of view, the facts are that we've seen the first 50 basis points tightening. But the bet, if you're investing in the market, is inflation to come down before the economy really rolls over. And I personally think that's a bad bet to make at this point. So I think inflation is going to stay stubbornly high for reasons that didn't exist in prior inflation cycles, which are the war in Ukraine, which are the supply chain issues that are stubbornly existing still. And sure, you can point to certain data points and say, okay, so inflation's peaked here, as Brad Gerstner did, but overall inflation is still high. So while wages, today was an amazing report, wages going up over 5%, but you've got inflation at 8.5%. So you've got that imbalance, and you still have sticker shock. So I think that the market is still to be sold on pops. And until everybody's bearish, until everybody hates the market, and until we see the economy start to roll over, I'm just not a buyer.
Okay. Kevin O'Leary, Kramer says market's getting oversold. He's been looking for selective, and I use that word selective for a reason, opportunities. He's not sitting there buying hand over fist, obviously. But you're buying a lot of stocks, which jump out to me as a statement of where you stand. I'm talking about Chevron and DuPont and Cigna. Yes. And Moderna, and United Health, and you bought more Home Depot, and Apple, and J&J, and P&G, and Pfizer, and Baba, and Tencent. Looking to add Facebook to Facebook, maybe today. Why now?
All of those companies, Judge, that you've just listed do not require financing. They have very strong cash flows. They have very strong balance sheets. They distribute profits to shareholders. The only difference between 6 months ago, 4 months ago, 3 months ago, 2 weeks ago, and today is their PEs have been crushed because of the change in the sentiment in the market. And I understand that, but at the same time, I have a choice to make as an investor. I can go to cash. My cash desk can pay me 44 basis points in an 8% inflationary environment. That means I'm basically losing 7.5+%. Gone, vaporized, history. No value there. Not going to do that. Do I want to buy the 10-year bond at 3%? No. Horrible value. Until that has a 5 handle on it, it's not going to be my portfolio. Can I find stocks like the ones you just listed that actually have pricing power, that are must-have items for people, regardless of the price of the S&P? that are going to continue to sell those goods and services ongoing, even into an inflationary time, irrelevant to what happens with Russia and Ukraine. All of those companies are going to perform in all of those metrics. The only question we have to decide is what price we're willing to pay for them. And starting in the last few days, I'm willing to pay the price. Now, I don't know if I'm catching the bottom, but I know these companies are not going out of business with anything to do with Powell or anything else in the economy or Ukraine or Russia or anything anywhere else in the world. These are mega cap, really high grade balance sheets with pricing power. I'm going to eat some more of them very shortly.
Yeah. Right from the horse's mouth then, someone who very clearly agrees with my point of view and someone who absolutely does not agree with me. Weiss is of the opinion that long-term the trend we're going to be seeing is downwards, and that while there may be green days, green weeks and even green months at times, as a whole, this will without a doubt be a very red year. Kevin O'Leary, though, is of a different point of view, that there are deals to be made here, and it all revolves around the idea that the companies that he's buying are safe from bankruptcy. The stocks he's buying don't need to raise capital, they don't need to take out loans, and they don't need to do well in the short term. Now, in the long term, this strategy really is solid. Facebook makes oodle loads of money and has no chance of going bankrupt. It's also very appropriately priced according to historical measures, so Kevin is diving in head first. Personally though, I think that Weiss and I are of the same view here too, and I don't see a reason to dive headfirst into a company and risk a 50, 60 or even a greater loss on these stocks just because cash is also likely to give you a 7% loss. Ultimately, if this is the bottom, Kevin will have made the right decision, but if it isn't, then he misses out on the chance to really make himself a boatload of money by letting these companies move from being appropriately priced to being downright undervalued. And really, that's what I'm going to be looking for over the next year or two. Now, really quickly, if you're looking for a way to stay clued up on all the most important financial news, then consider checking out the Daily Upside, a free daily newsletter that condenses everything you need to know into a quick 5-minute read every single day. Link is down below in the description. If you enjoyed this video, then please make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insights into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to Masterworks, a site that can help you protect your portfolio against inflation through fractional shares of art from world-famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets on the brink. It's completely free to sign up, so make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get over 7% interest on stablecoins to protect your hard-earned cash from being eaten away by inflation. It's literally free money. Thank you all for watching. Stay stoic. Until next time.